Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday the 1st of April. Well, Q2 has basically started where Q1 left off. Huge downside day that we've got in prospect again, 4% on FTSE, between 3 and 4% across the European markets. US futures, well, they are off the lows, but still another sort of 2.7% down on yesterday, this morning in the prospect in the wake of another 1.6% lower yesterday. Little bit of a choppy move in recent days on the S&P 400, but a second day of losses seems to be building for that. It could be that trend is finally, that trend of recovery is starting to roll over. Now, generally speaking, when the dollar performs well, that suggests risk appetite is low, and we can see that through today. Across the major currency pairs, dollar is trading higher across the board. Commodity currencies are the weakest, Aussie dollar and the Canadian dollar all over 1% lower, and that tends to come as the dollar is strengthening and risk appetite is low. And yeah, we've seen that the dollar index has started to pick up, interestingly, as we've started to see treasury yields falling away again on the 10-year, again a reflection of risk appetite being negative. Gold, well, volatility has been all over the shop. I'll talk about technical implications of the moves in a little bit, but certainly gold is trading higher today by 20 bucks. It's unwinding significant losses from yesterday, so I don't know whether you take that with a bit of a pinch of salt, that rebound, but the technical implications I will talk you through in a little bit. The other one is oil. Oil continues to fall away. Look at that. Oil hasn't yet retested Monday's low of 1927 on WTI, but certainly the downside move that we have seen is still building, and maybe not yet seen that bottom or the low, which is an 18-year low on oil. So yeah, not looking all that great. Okay, so what about data points? Well, we've got the first day of the month is the PMIs for manufacturing sector, and we've got the final PMI data for the month of March. And initially, let's have a look at the Caixin data, the Chinese numbers, which were actually better than expected of March, 50.1, but effectively that is just sort of flatlining after a horrific February. So yeah, you wouldn't necessarily say that's a positive, but certainly the markets are not taking it as a positive yet anyway. Into the European session, we've had the Eurozone data, 44.5, so a slight downward revision on the flash reading of 44.7, but the UK had a slight upward revision to 47.8. So little mixed messages there out of Europe. For the ISM data this afternoon at 3 o'clock, it is 45.0, so there or thereabouts, sort of the mid-40s, which is what the European data has tended to be. Before that, though, we do have the ADP employment change number, 150,000, down from 183. Now, well, bearing in mind that the weekly jobless claims were over 3 million, yeah, this will be interesting to see what sort of number we get out of the ADP employment change at 115 today, but it doesn't clearly bode well for payrolls on Friday if that were to be the case. So yeah, at 3:30 we've got the EIA weekly crude oil inventories, 4 million barrels of oil build, and again that would be a 10th week in a row of oil inventory build, and that downside move on oil doesn't really seem to see much respite coming there. Okay, so what about my chart of the day, which is Euro Sterling. Now, Euro Sterling has been under interesting sort of swings on Euro Sterling. Sterling has been all over the shop. Massive weakness through February into March, but then that weakness is being unwound, and we've seen that with a big cable rally, but also this Euro Sterling correction, a run of negative candles in a row. Now, yesterday's move was slightly less negative than previous, with only a very small real body of the candle, but certainly today we've seen a continuation of the move low. 50% fib, we're trading now decisively clear of that on the downside, so that becomes resistance or a basis of resistance overhead. But look at these momentum indicators, negative configuration on RSI, stochastics especially. Also, MACD lines have got plenty of unwind to go. So I think a retreat back towards this 85.95, 86.80 support area of these breakouts could well be seen. Obviously, trading clear of 50% fib, you open up 61.8, which is 87.45, which incidentally was also another breakout around that. So it's a nice basis of support initially. But you'd look with this downtrend in mind, and the fact that you're running consistent lower highs across these sessions, that any intraday rallies are being pounced upon as the chance to sell. 89.15 becomes today's resistance. You can see here on the hourly chart this run of lower highs and lower lows, consistently failing around the 50 area, 55 on RSI on the hourly. MACD lines bear crossing again, similar to what we saw yesterday and also the day before. So this little intraday unwind has been used as another chance to sell. Downside potential on the stochastics. Initial support 88.10, which was yesterday's low, but downside below that pretty much opens up the support that starts around, well, 87.45, but ultimately probably 86 area to 86.80 is likely to be tested in due course. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinar.